Hi guys, Boris Dorfman here with LBC Capital. This episode is only for real estate investors out there, for former, current, and future. And when I say investors, I don't mean flippers, I mean investors for long term. Somebody asked, forgot who, maybe Samzel, when do you sell real estate? And the answer is never. Most of us don't have the luxury of having billions of dollars behind us, but turn your mindset to a long-term real estate investment cycle. And when I say long-term, 10, 20 plus years. Again, those of you that think about investing real estate long-term, we all know about cycles. It would be nice to buy one property a year, 10 properties a year, and invest it the same way you invest in mutual funds through your 401k, but we have to be mindful of cycles, okay? This cycle may be prolonged for another 20, 30 years. We don't know what kind of cycles we have and when those cycles come. But we know in retrospect, right? So I came up with this concept I called it Dorfmans Loop. Dorfman Loop, circle. Basically, the last cycle, we know 2007 to 2008 was the top of the market. It was absolute top of the market. And we know that around 2010, 2011, the market bottomed out in retrospect. But we cannot time the markets, nor we want to. We have to time our psychology. How do you invest in real estate market cycles, right? And it's really irrelevant where the cycles, when they are and how they come. It's relevant, your psychology is really relevant, and also your risk, your adventurousness. Anyways, really how adventurous you are, how much risk you're willing to take. And risk is really, a lot of it comes with age, with families, with kids, right? When you're 20, when you're young, you got nothing, you can risk everything. You have a lot at 25, you can still risk a lot because you have the whole life to recoup that. You start having families, you start having kids, all of a sudden you're 45 years old and maybe you may not want to risk as much. So be mindful of the risks. And some of you may be more risk averse than others. Some of you may be risk takers. Some of you may be investing in Tesla stocks or cryptocurrency. But really it's very individual. So it's irrelevant really timing the market. It's all about your perception. So the principle of Dorfman's Loop is this. You have to think in your mind, when do you think we're closer to the top? And when do you think we're closer to the bottom of the market? Right? You cannot time it exactly, but in your mind, you may have thoughts, okay, 2023 now, right? We have all these events, the real estate prices are at all times high. Some of you may think, okay, we're closer to the top than we're at the bottom, right? We may be here. We may peaked out 6 months ago and we may be here, right? Some of you may think we still really took a step back a little, but we may still be here in this new cycle. Whatever you think, it's really your mental health, because you don't want to, we dread missed opportunities, and more than that, we dread losing money. So think for yourself, where do you think we are in this circle, okay? And there is really, I touched on this before, but if you strip down to risk reward, you can divide up investing in real estate into two things for the purpose of this video. Buying real estate and lending on real estate. I'll explain further. Lending, investing in fund like LBC Capital, investing in individual trust deeds, giving your friends money for real estate projects. Opportunities will present throughout this cycle. Your neighbor may call you and say, hey, Johnny, why don't you buy my house at a 20% discount. I don't have time for agents. I like you. I want to come visit my family home 10 years from now. I know you'll allow me to, and we'll all save on 6% on commission, right? So if you get an opportunity to buy silver for the price of gold, buy it. And these opportunities may present themselves at any time in this cycle, in the life. The opportunity presents itself, grab it. Okay? So we're not talking about opportunities, we're talking about the cycle and where you think we are in this cycle. So you have sizable wealth, or you have a little wealth and you have a high-paying job and you can set aside money to buy real estate. Given the conditions, given your availability of the capital, you really want to buy at the bottom of this cycle. Okay, so for example, we topped out in 2007, 2008. Prices were elevated. They slowly and sometimes not so slowly started to come down. Okay, and let's say you think we're already here, right? So somewhere, again, you're not going to time it exactly, but somewhere around here you start thinking about buying. That's when you start buying. You buy here, you buy here. The market bottomed out. You don't know it. Okay? You buy here, you buy here, you buy here, you buy here. I understand you may not have enough money to capture everything, but given the availability of the capital and strong desire to invest in real estate, you want to capture the bottom of the market. It's going to be on the way down. It's going to be on the way up. A lot of people make the mistakes thinking, okay, we're going to start buying when market starts going up. That's when we know the market bottomed out. So you start buying here. Again, everybody's different. Everybody's risk level is different. Everybody's availability of the capital is different. But you buy here. You know, you don't discriminate. You buy everything. You have to have a formula. Commercial, residential, certain areas, multifamily. You buy for appreciation, you buy for cash flow, but given your formula that you can come up with, you buy here. Then we get out of this middle ground, middle point, and really you're starting to think in your mind that market is really overheated, right? So a lot of my subscribers, when COVID started, they said, fuck, that's it, sky's gonna come crashing down. If that was your mentality at that point, that's when you stop buying, right here. This was the breaking point for you, if you thought COVID was the end of the world. Or if the price is overheated, like today, you may think we're here today, or you may think we're here today or here. When you at the top half of the circle, that's when you stop buying. You're not buying, but you still want to invest in real estate. And you have the same mindset as we are. You never sell real estate. You keep it, right? So, but how do you invest in real estate when real estate in your mind is overheated? That's when you become a lender. You still have the money. You give money to people that are buying. Okay? So you may buy a house, apartment building for $1 million today. But when you become a lender, same $1 million, or it may be 1.2, you're only lending 60–70%. Okay, the downside, you become an owner. When you invest in LBC Capital, you're part of the pool, right? The fund will become an owner if this guy defaults to the lender, okay? So your risk is about 60–70% of the market, plus fees, plus time lost. But if you still want to invest in real estate, you can do it in any market. Okay, and at some point in the top quadrant, in the top half, you're going to see more opportunities. Okay, you're going to see more opportunities here because, you know, a guy losing a property may have other properties that he may sell to save other properties, to save this property. Okay, so this guy needs to close day after tomorrow. He's going to come to you and say, hey, Mary, why don't you take my property off my hands for 20-25% discount? Okay, so there will be more opportunities here. This is the whole opportunity zone, if it makes sense, but there will be displacements here. So when you become a lender, you invest in trust deeds, you invest in mortgage funds, your risk is significantly less, right, than here when you buy. You don't get any appreciation, but in any rate, your yield, your cap rates are much higher than when you become a buyer. When you're here, real estate goes up in value. You capture appreciation. When you're here, you limit your downside. Okay, you get higher yield, you have lower risk, and if you play your cards right and make sure your money is somewhat liquid, you can always get out of being a lender. You can sell your note, you can withdraw your money from the fund, and you can become a buyer if you see an opportunity. Now, there's a lot of variables, interest rates, but it all comes down to where do you think you are in a cycle and how much upside or downside there is to the market. The best way, if I would have to summarize everything in one question, you have to ask yourself is, do you think we're closer to the top of the cycle or closer to the bottom of the cycle? Do you think the prices are rising and they have a lot of room to appreciate, or do you think there is more risk to the downside? Maybe you think the prices may rise another 10%, but the chance, if the prices start to fall, they may fall 25% top to bottom, right? Like peak to the bottom. Anyways, Dorfman Cycles, call me if you have any questions. Subscribe if you're not subscribed yet. But I think this is a pretty cool tool for those of you that think investing in real estate is forever. You never sell. And you have capital that you want to preserve and you want to make money through real estate investments, either buying assets or lending on real estate assets. Thank you, guys.